Hello everyone, I'm Austin Petersen and I'm a presidential candidate for the Libertarian Party. Welcome to these live streams, I hope you enjoy them. Today we're going to be talking about a topic that is a very big pet topic of mine, something that I love, but the general public tends to not be as interested in, unless you're a super nerd libertarian like me, which you might be if you're watching this live stream. Today we're going to be talking about the banking system. We're going to be specifically talking about a free market monetary policy in terms of our monetary system. And today I'm going to be reading to you from some of my favorite scholars. I'm going to be talking to you from pulling some excerpts from Friedrich Hayek, as well as Professor Lawrence White and George Selgin, who have written extensively on the type of monetary policy that I would like to see the United States return to. And the key word there, of course, is return to, because the United States actually did have something of a free market in money for a short time. We're going to talk about the kind of monetary policy that I would like to see as President of the United States, and heck yes, audit the Fed, Alex Benstick, but even better than auditing the Fed, how could we end the Fed? We want to end the Fed, don't we? Let's talk about how we would really end the Fed, because if I were President of the United States, of course, I would be required to uphold the Constitution and all of the laws thereof, which would mean that I would probably have to appoint a chair of the Federal Reserve. Now, I would look, of course, to find someone who was an Austrian scholar or perhaps a Chicago school scholar. And if that were the case, then we would probably have a good inflation hawk there, while I was looking to transition to the type of monetary policy that I think the United States should return to. So let's talk about what that means. And a lot of libertarians, they tend to be in favor of the gold standard. Now, I'm actually not in favor of the gold standard, and I'll tell you why. Because I think that it's, the idea is, of course, that you would restrain the government by having a fixed quantity of money set to a fixed quantity of gold, perhaps. But I don't think that, I think that what will happen is what has happened before. The government will actually come in and they'll fix the price, or they'll do what Franklin Delano Roosevelt did, and they'll have a bank holiday and then they'll seize everyone's gold. So we can't trust that the government will uphold the gold standard even if we set it into law. So how can we destroy the banking cartels? And as a Libertarian Party candidate, let me tell you, I want to destroy the banking cartels by putting the knife to the throat of the Federal Reserve. And let me tell you how we do that. We introduce competition. And what is that competitive system called? It's called free banking. If you've never heard of this concept as a libertarian, let me tell you, this is the ish. This is the good stuff. This is what you really want to be talking about when we're talking about transitioning away from a fiat, forcible fractional reserve system into a free market monetary system. And this is, I'm going to be reading to you from Wikipedia, but I did check all the sources in this, and I have a Hayek to pull from as well. But free banking refers to a monetary arrangement in which banks are subject to no special regulations beyond those applicable to most enterprises, and which they are also free to issue their own currency. In a free banking system, market forces control the supply of total quantity of banknotes and deposits that can be supported by any given stock of cash reserves, where such reserves consist either of a scarce commodity, such as gold, or of an artificially limited stock of fiat money issued by a central bank. In the strictest versions of free banking, however, there is no role at all for a central bank, or the supply of money is supposed to be permanently frozen. There is therefore no agency capable of serving as the lender of last resort in the usually understood sense of the term. Nor is there any government insurance of banknotes or bank deposit accounts. So what does this mean? This means, of course, that there would be no FDIC. Whenever you go into a bank, you see the little note that says FDIC insured. Now, of course, you wouldn't have something like that in a free banking system. And if we're going to move towards a more free market monetary policy, we do need to talk about what it means to get rid of the Fed. There would, again, be no lender of last resort. And if they say, oh, well, we'll have what happened in the Great Depression where there are no banks, and of course, where there would be no lender of last resort. And of course, Milton Friedman took the monetarist approach to this, the Chicago school approach, and he said the Federal Reserve should have just gone ahead and printed the money and handed it out. But of course, the Great Depression occurred while we had a Federal Reserve, while we had a central bank. So don't let people tell you that the Great Depression was caused by free market monetary policies, because even Ben Bernanke said in a speech to Milton Friedman, "You're right. We did it. And thanks to you, we won't do it again. We're talking about causing the Great Depression. So let's talk about what Hayek said. He gave an incredible speech called A Free Market Monetary Policy, and I'm going to read A Free Market Monetary System, which you can follow along with if you like. I'll drop this in the comments right now, and of course if you have questions for me, you can drop those in the comments as well. And I will try and keep this short. I know that people like short live streams and videos, of course, so we want to make sure we keep it up for the people who get bored easily. So here we go. I'm going to drop the thread in here. I really want you guys to read this. This is very important for us, okay? There we go. Free Market Monetary System. So you guys can read that. That's from the Mises Institute. Now, so let me read to you from Hayek's speech here, and it's just tremendous, beautiful words. I am more convinced than ever that if we are ever again to have decent money, it will not come from government. It will be issued by private enterprise, because providing the public with good money which it can trust and use can not only be an extremely profitable business, like Bitcoin, it imposes on the issuer a discipline to which the government has never been and cannot be subject. It is a business which competing enterprise can maintain only if it gives the public a good money as anybody else. Now, isn't that interesting? We don't allow the government to set the price of bread or milk or cheese or beer. Why do we allow government to set the price of our money? And of course, if you were a bank, you would want to be competitive. You would want to have good money. You wouldn't want to defraud your customers because you'd go out of business. And I would love to see that kind of policy here in the United States, where perhaps Bitcoins or some other money was allowed to freely circulate. And this is really the heart of Austrian economic policy, not a gold standard, mind you, which Rothbard advocated for a gold standard and 100% reserves, and I disagree. Because I think that, honestly, if we were to have a free market monetary policy, you could have fractional reserve banking, as long as it was privately contracted. You see, right now, the system that we're in, we are forced to have a fractional reserve bank, you know? And if we were allowed to have a competitive monetary policy, some banks might have fractional reserves, some banks might have 100% reserves. Some banks might have just higher reserves. You'd have competition. And why is it when I go into a bank that I can only earn 1.5% on my CDs or my money market accounts? Shouldn't we allow competition in our banking system? And let me tell you, the banks don't want this because it destroys their monopoly. Because let me ask you a question. How many of you have actually gone and shopped around for a bank? You know, I'll bet you that not many of you have done that. Now think about it. Most people just walk into a bank, set up a checking account or a CD, right? So we don't think about our money as much as we should, and they don't teach us about this in school. But you know, let me finish from reading from Hayek here. It looks like the sun is coming right into my face, so I'm going to try and scooch over a little bit so I don't get blown out. This is what happens when you're live, folks. Anything can happen. See that? See that? That's what happens when you're doing it live. The sun is coming to destroy me. I'm going to scooch over a little bit and hopefully move that around. This is live, guys. Anything can happen here. There we go. See that? I'm doing that with my toes. Okay. So, in contrast to a gold standard, why does Friedrich Hayek like a free banking policy more than a gold standard? Listen to this. I'm afraid I am convinced that the hope of ever again placing on this government discipline is gone. The public at large have learned to understand, and I'm afraid a whole generation of economists have been teaching the government has the power in the short run by increasing the quantity of money rapidly to relieve all kinds of economic evils, bailouts, stimulus, etc., especially to reduce unemployment. I mean, one of the mandates that the Federal Reserve has, and I'm going off my own rant here, one of their mandates is to reduce unemployment. I mean, what does a bank have to do with unemployment? Now, that's just ridiculous. Unfortunately, this is true insofar as the short run is concerned. The fact that such expansions of the quantity of money, which seems to have a short-run beneficial effect, because in the long run, it's the cause of much greater unemployment. But what politician can possibly care about long-run effects if in the short run he buys his support? Of course, you see, and that is why presidents try and place pressure on the Federal Reserve to inflate, try and get, this is the basics of Keynesian economics. You know, it doesn't matter where the money goes, just spend, auto bailouts, you know, bail out GM, bail out Chrysler, bail out all of these businesses, bail out these banks, bail out this bank, but not that bank. No, I'm not going to be singing Trap Queen. In another podcast, I will sing Trap Queen, though. My live streamers, y'all are nuts, all right? So today we're talking about banking, all right? But did free banking ever exist? Yes, it did, and there were many instances of free banking. Let's talk about 3 different examples. One was Switzerland. In the 19th century, several Swiss cantons deregulated banking, allowing free entry and issuance of notes. Cantons retained jurisdiction over banking until the enactment of a federal banking law in 1881. The centralization of note issue reduced the problem of the existence of a bewildering variety of notes of varying qualities at fluctuating exchange rates. Oh my God, what is he saying there? Too much freedom. There's just too much freedom. People are too stupid to know what money is worth, and you know, everyone is confused. Can I take this money or can I take money? The people are too dumb to know what money is worth. So we'll set the quality of money for us. And that is at its heart the problem. This is the tyranny of the banking system that we have right now. And if I were president of the United States, I would push for a free market in money. Now, Scotland was another good example. Of course, this is the big one. Scottish free banking lasted between 1716 and 1845, and it's the most researched and developed instance of free banking. It was organized around 3 chartered banks, and those were the Bank of Scotland, the Royal Bank of Scotland, and the British Linen Company, and numerous uncharted banks. It resulted in a highly stable and competitive monetary system. Now, we're almost finished here, and then I'll give you my sources. But the United States, America had free banking, or at least it had a semblance of free banking. So, although the period from 1837 to 1864, which we all know what happened in 1865, in the United States, this was often referred to as the free banking era. And the term is really something of a misnomer because it refers to a general system of free banking in the literal sense described, but rather to various state banking systems based on so-called free banking laws. So basically, the states were issuing currency, right? There was a Missouri currency. There wasn't a Missouri currency at the time because I think Missouri wasn't incorporated as a. Yes, it was. Missouri was incorporated in a state by that time. But it was considered to be an untenable system. Well, of course, because the government is still creating the money, and we want a free market in money. We want real competition. The banks don't like this. They don't want you to know about this. I'm giving you the real secrets. You're not going to see this on Alex Jones where he's like, "We have the documents." No, we're talking about what's real libertarian policy here, and I'm so glad you all are tuning in. All 125 of you. But listen to this. Most importantly, U.S. free banks, they were denied the right to establish branch networks. So see, that is a problem. And they had to secure their notes by purchasing and surrendering to state banking authorities certain securities those authorities deemed eligible for the purpose. So in order for them to set up their own money supply, they had to give some sort of bond, perhaps, to the state system. So it wasn't really the sort of free market system that you and I as libertarians would prefer. But there was a lot of bank failures during the free banking era, and then from 1863 to 19, known as the national banks era, state chartered banks were operating under the free banking system, and some scholars have found the system was mostly stable compared to national banks of that era. So why can't we go back to this? Why can't we end the Fed? I think we can, and if I were president of the United States, I would have, in the short term, I would appoint an Austrian scholar to be the chair of the Federal Reserve System. Perhaps we could get Ron Paul, wouldn't that be exciting or interesting? Or perhaps Peter Schiff. And they say I'm not a libertarian, let me tell you, because my NAP. But no, seriously, this is the ish, ladies and gentlemen. This is this is the heart of freedom. So let's talk about this more. And I want you to read A Free Market Monetary Policy by Friedrich Hayek. You can also read Free Banking by George Selgin. And I want you to read my boy, Larry White, who is a BAMF. And he's written something called Competition and Currency, Essays on Free Banking learning and money. And isn't that lovely? We've got our own Austrian scholars. I believe that we can be more free, ladies and gentlemen. I think that we can have this system one day. But the only way we can do it is we can't end the Fed necessarily through legislation, even though it was a creature of Congress. But I think we can end the Fed through competition. Thank you very much for watching our live stream today, ladies and gentlemen. And of course, it wouldn't be a live stream if I didn't do my important thing, which is to ask, of course, please send me Federal Reserve notes. Do me a favor, guys. Send me at least $5, $20 would be even better, of course, Federal Reserve notes so that I can end the Fed and we can have a free market in monetary policy. Go to austinpetersen2016.com and send me some Federal Reserve notes so that I can end the Fed, ladies and gentlemen. And thank you so very much for supporting my campaign. Don't forget, you can subscribe to these live streams. If you're on your phone, there should be a little subscribe button, so you'll get a ping on your phone whenever these pop up. And thanks for your support, because without you, I don't have Coke bucks. So all I've got is you, the grassroots. Thank you very much for your support and your kindness and your generosity and your love for freedom. You're all great Americans and patriots. Have a great day.